you guys and gals, what we're going to do is I want to break it down this morning real slow for you. What we have right now is we have, let's look at the two markets. First of all, the first order of business when you first log in the trading room. So I'm on gold. If you're a new member, today is going to be very, very basic for you. I'm going to show you how to do this. So we'll spend about 15 minutes right now going over how to trade these, how to trade these markets and how to enter these trades. So first of all, what trade am I looking for next on gold, and why am I looking for it? The first thing you do when you first log in, no matter what, is you need to, hey George, good morning to you, is you need to look at the moving average on the price profile. Now I'm going to break down where the profiles are and what they mean in a second. But the most important thing for you to do when you first log in is nothing else matters. Don't look at market profile. Don't look at the J signal. Don't look at anything else. Look at these two moving averages. Now, we do have the moving averages, a 5-minute trend filter built into the J signal that works on your own charts. So you can look at that if you don't want to look at the black charts. The bottom line is price profile is this long, big, long chart here. Price profile. Okay? Market profile. These two moving averages are very important. There's two moving averages. There's no secret to them. There's a 50 moving average and a 20, simple. Okay? Moving averages are absolutely, to me, worthless to trade off of. I haven't found anybody that's made money from trading just off moving averages. They're almost impossible to find out which one it's going to stop at because they're lagging moving averages. They're lagging in nature. It's a very lagging indicator. But they're great for trend direction. Okay? The trend direction, how you're going to figure out, you need to have a bias every day you come in the trading room. So the first order of business before you even start trading at all is you must establish a bias. If you don't have a bias, you're going to get cooked in this market every single day, no matter what you trade. And that's been the history of trading the Forex. I don't care if you trade stocks. I don't care if you trade futures. If you don't know if you're in a trend or chop market, you can't do any trading, period. So the first thing you ask yourself when you first log in is if the 50 is a longer moving average than the 20, then that's going to take more importance over the shorter moving average. I call that the dominant moving average. The dominant moving average is pink or magenta. That's going to tell me the overall trend of the market when I first log in the trading room. And that's very important for me because it's going to let me know where I'm going to buy and sell retracements with trend. So that's the first order of business no matter what, is number one, establish if we're either trending up, trending down, or we're chop or neutral. The market can only do two things. It can trend, it can go vertical up, vertical down, or it can go sideways or in chop. Since I've been trading over 20 plus years, the market typically during the week will trend 2 days and chop for 3 days, or it will trend for 3 and chop 2. Either I'm 3-2 or 2-3. So it's very important for me as a trader to understand whether I'm in chop or trend, because if I can't trade chop, then I can't be successful trading during the week. If I can't trade trend, I can't be successful during the week because it's easy to be a great trend trader. Anybody can make money in a hard trend. But if you give it all back up on a chop day, why even participate in the trading endeavor in the first place? So you got to establish which side is your bias. That's most important. The easiest way to do it when I first look at those moving averages, I look at the magenta first. I look at the angle of it. It's a longer moving average, so the angle of that one is very important to me. As you can see, I am down. My angle's down. It's been down all the way, all morning, down. If you're at a 30, 35, 40 degree angle, sometimes at a 45, you're in a hard downtrend. You cannot take any buys in the market according to price profile on the black charts and volume profile. And I'll go over that in a second. You can't take any longs. You're only going to do retracement shorts, period. And we just had a qualified short here a second ago, which was a nice short, and I'll show you how J Signal picked that up. But I don't want to get ahead of the cart. The members know how to trade that. We had a nice little short there a second ago. They're called the high. But it's because the market is in a hard downtrend. Now, since the dominant moving average is down, I want the white moving average cross down also. It's a shorter term moving average. So I have trend direction because the MAs are crossed down and the magenta is angled down. That gives me complete trend direction down. No buys. There's 0 buys on these black charts at all. Okay? So that's the first order of business. If you don't get that right, you can't trade off market profile. You can't trade my Fibonacci J signal. You can't do it because you don't know the overall trend bias. So no matter what, you must establish when you first log in, you ask yourself, what's my trend? Am I trending up, down, or am I neutral in chop? It's obvious to us. It doesn't take the smartest bear in the woods to realize that that's a hard angle down. Now the key is the spread. If there's spread in between the moving averages, that's the hardest downtrend you can possibly get in the market. So we have to understand that the spread is just a key. I mean, the spread is key because it tells us that the market's hard trending. But the key is just looking, it takes a half a second. Are we angled down? Are we crossed down? That is a hard downtrend in gold. Okay? So that is the first order importance. Now, let me break the other charts down real quick because I don't want to make this too long. The bottom left black chart, there's a couple profiles we use. We're not talking about the ninja charts over here. We're not even looking at those yet. Let's concentrate on the black charts. We have volume profile to the bottom left chart. Volume profile is the bottom left. There's what's called high value area and low value area when I reference in the room. The high value area will be the red dots. The low value area will be the green dots. So high value right now on volume profile is sitting at 1292.27, where my cursor's at right here. My low value is sitting at 1287.77. So the first order of business, I'm going to give this to you right now under documents. If you look under documents on the bottom right, under your viewer, let me post this. I want you to print this little sheet out. It tells you what to do in a downtrend with market profile off these black charts and with J signal. So when you can later today, it's under documents, under the far right. It's called market profile trading rules. And the first order of business is said when you're in a downtrend, it says sell the first test of high value area because we're not going to counter trend trade these markets. So if we're in a downtrend, we don't buy 1287.77 on price profile, our volume profile here. We're looking for the market to retrace to 1292.27. Once it retraces to 1292.27, that's the first test of high value area in a downtrend. You can never buy low value in a downtrend. You can't buy it, not unless you're on J signal number 3, which I'll show you. You can only sell the first test of high value area. If I was in an uptrend, I could only buy the first test at 1287.77 down there. Right? But I'm in a downtrend. I can only sell 1292.27. That's called a number 1 trade. I only got 2 trades you need to learn on retracement trading in this trading room. You learn how to trade a number 1 with trend and a number 3 trade. A number 1 is just a retracement trade with overall moving average trend. If the moving averages are down, I sell the first test of high value area. If I look on volume profile, it's 1292.27. If you come over this middle chart, which you have to look for trend, the trend direction, my price profile is at 1295.60. So this is a price profile, this long chart. So my price profile is at 1295.60 and my LVA is at 1291.30. So now I got confluence on the trade. And what a confluence means is this. It means when 2 indicators overlap each other. When I got price or volume profile that overlap. Because this is setting up for a number 3 trade on my price profile. The difference between a number 1 and number 3 is this. A number 1 is a deep retracement with overall trend into HVA in a downtrend. A number 3 is saying, hey, if I break low value area, I retest LVA, look for a continuation. Because I cannot buy LVA in a downtrend. So when it came down to 1291.30, I knew not to buy that level. In fact, there was a number 2 trade, a qualified number 2 that caught this short here this morning for you traders, which I'll go over that in a few minutes. But the bottom line is this is a breakdown. Then you look for a retest. You look for a short. So that's the first order of business is when you're using these black charts, look at the overall trend direction. That's the first thing you do. If the trend is down, you ask yourself, where's my market profile with overall trend direction? If I'm in a downtrend, where's my HVA? Because I'm not buying LVA. I'm not a counter trend trader. I'm not going to counter trend trade LVA when I'm in a downtrend. I'm not going to buy these green. I'm going to look for the green to break on a number 2 trade with my symmetry dots. This is an exact fill right here. This is an exact trade fill right there on a number 2 trade, which I'll go over in a second. Use my symmetry dots. That exact bar said to short the market right there on LVA, because that's my only momentum trade. That's called a number 2 trade. It's called the exact breakdown. All right. So my point is that when you're trading, if you trade a 1, 2, 3 setup, a number 1 is just a retracement with overall 5-minute trend. If I'm in a downtrend, you sell the first test of HVA with a pull-in bar. Wait till it turns red, and then you get a pull-in bar over here. Okay? If you are in a downtrend, it won't reach the red HVA. If you don't reach the HVA, all right, then you look for a breakdown retest of the LVA for a number 3. So either I get a number 1 at 1292.27, or I get a number 3 at 1292 right here. Actually 1291.30. Okay? And that's what we're going to do on these 2 black charts. Either you have a number 1 or you have a number 3. Since I've been trading over 20 plus years, there's only been 2 setups that work every single day, right? Over and over again. It repeats itself, right? The key is this. We must time the trade when it gets into within 2 ticks of those market profile levels. Once we get into them, you can look for a red bar reversal or green bar reversal to pop you in the trade. Now on number 1 trades, I like using a hard 15-tick stop no matter what. If I'm doing the number 3 J signal trade, it typically is going to be a 9 to 11 tick hard stop because every trade's not going to work. We know that taking a loss is part of the business expense, but we cannot let small losers turn into big losers. So if I come up into the 1292.20 level, which is doing now, it's coming into J signal, I get a reversal bar right now. If I get a red bar reversal and I get short, then I have a hard fixed stop that's in the market right now. I'm allowed to go short on the first test of this this HVA, if I get a red bar reversal. If it jets right through this without a red bar reversal and I keep going up, then my next sell level is price profile with the overall within 2 ticks with the overall trend. So that's how we trade market profile. We let the market come to us and we look for it to break through. It's allowed to break through intra-bar. I don't care if it breaks intra-bar because it's allowed to break intra-bar, Diane, because this is where all the novice traders get smoked. The novice traders think just because it breaks 1292.27 and goes to 1292.30 or 1292.50, it's not a sell. That's not the case. That's called a straddle. The 5-minute bars allow to straddle that resistance. If that 5-minute bar closes outside of, in a fast market, outside of the volume profile here, by a whole body candle, not the wicks don't get included, then you have a breakout. You cannot sell on a reversal bar. Don't make it any more difficult than that. Don't have a barrier here. When you touch, this 5-minute bar is still ticking right now, okay? Since a 5-minute bar is still ticking, then if you get a reversal bar, you're allowed to sell that trade. If it closes outside a 5-minute close, and the easy way to see it is this, it's only 8:34 right now. It turns 8:35, it's still going to be a close below or straddling the HV and LVA. It's still going to be a sell signal. If it would close outside of that, then you do not have a sell signal anymore. That's how you trade market profile. You never wait for the next 5-minute bar to reverse. You use the pull-in bar on your smaller time frame to pop in the trade. You use a pull-in bar, a red bar reversal, as the trigger to pop in the trade. You don't wait for a whole 5-minute bar to close. The 5-minute is a setup. The market profile is a setup. And then the overall trigger would be a smaller time frame, which a lot of traders use the 3 Simrenko or the 2 Simrenko to pop in the trade on a bar reversal. Okay? So that is how you can trade market profile. Go over to oil, Gerald, real quick. Let's go to oil. Oil. If we look at oil, excuse me, if we look at the dominant moving averages, we had a dominant moving average that's up. Been up all morning since 4:30. So if that is up, okay, if that is up, then we know we've been in a hard uptrend all morning. But look at the moving averages cross down. The 20 crossed down to the 50 on crude oil. So what does that, what does that tell me? I'm in a moderate downtrend, right? I've been hard up all morning, but the moving averages crossed down. So I'm in a moderate downtrend. So what do? Sell the first test of volume profile or price profile. Volume profile was sitting right here below 103.18. Right, 103.18. Look at my volume profile on the bottom left. Right, my price profile was sitting at 103.30. What am I allowed to do on market profile? I'm allowed, according to my rules I just printed out for you, I'm allowed to sell the first test of market profile. Excuse me, the first test. Only the first test. Not the second test, not the third test. You can get away with the second test on the N top and W bottom, but third test you always break out. So you're allowed to sell the first test of it. Okay? Volume profile is sitting at 18. I got up to it. You have the reversal bar. You're allowed to sell the first test. That is a market profile trade. All right? It's the first test of LVA or HVA with overall trend. The first test of LVA or HVA with overall trend. That's the number one trade. And we do it based upon trend direction. So that caught the swing high right there on the overall setup. Now, if I come into number one, I like number ones to be V tops or V bottoms. If it starts going sideways on me, and it keeps going sideways on me for 5, 6, 7 minutes, just get out of the trade. Take a small profit, take a small loss, because you should see immediate reversal once you hit into that market profile level. I mean, if you're waiting around for 10 minutes and it hasn't moved, I mean, take it out, right? The bottom line. So that's how we do the black charts. The bottom left is volume profile. Both of them are reading the same. High values are red dots, low values are green dots. Low values, the bottom line that down here is the moving averages are the same on both charts. I just put them on both charts so you can see them. Right? HVA is a red dot on price profile, the bottom left chart. LVA is down here. You can't buy LVA down here. Can't buy LVA. Right? Can't do it. So that's going to help you read these black charts. Now, the upper chart is I wouldn't even worry about that right now. It's called an ATR trade. But the whole gist of it is this. If my moving averages cross up on this ATR trade in the upper left-hand chart, the first test of that blue dot is a buy. If my moving averages cross down, the first test of that magenta dot is a sell. Okay? That'll really help you out on determining where this market can bounce. It's called the average true range trade. But I wouldn't even really concentrate on that until you get a number one or number three trade down. These are the two easiest trades to figure out in the market. Okay? Easiest trades to figure out. All right, now if you look at crude oil, let's go over to J signal then. Let's break J signal down. If we look at J signal, break it down here a little bit. J signal, let's go over a couple things right here real quick. I don't want to make this video too long for you. J signal has market profile also on it. This is low value area on J signal. The green is low value. The red is high value. When I get through the high value, it means the market's very bullish. I look for the first retest long for an ABC long off of, I'm going to go over this tonight in my conference call at 5 p.m. tonight. I'm going to go over how to trade ABC patterns just off market profile, the number 3 trades. So if you're around tonight at 5 p.m., do not miss my conference call on how to trade market profile. You're all invited. I'm going to go over how market profile can dictate when we buy and sell off a number 3 pattern. That's at 5 p.m. tonight. Okay? No, not yet, Gerald. So let's go over market profile here. I'll go over it in more detail tonight and replay my video tonight if you want more detail how to trade J signal with market profile. 5 p.m. tonight, we're going to record it. But if you look at the price action today on crude oil, a volume profile called the swing high up here, right? But it really had the J signal backing it. It had it backing it. Why? Because look what happened right here. When you trade off the market profile on your own Ninja charts, this happens on your own Ninja charts, it's called developing profile. Well, if you get outside of HVA, you look for an ABC long off HVA. It's a natural cycle to trade. There's an ABC long. If you get back inside of HVA, the market weakens. You look for an ABC short. Breakdown, ABC short. Don't make it any more difficult than that. Look how that market profile by itself called that swing, the two major swings in crude this morning. It called the major swing up right here and called the major swing down right here because my profile suggested it broke out of high value area. It's very bullish. Look for ABC long. My fib dots came in. There's my green bar reversal. It got back inside of HVA. Inside of HVA, the market weakens. Gets it up to my HVA again, ABC short. There's my bullseye short. Now check this out. This is what's called confluence. What happens is the black charts can conflude with your Ninja charts. We're very spoiled on gold and oil because we got three sets of market profile. I got my volume profile on the black charts, my price profile, and I got my dynamic or developing profile on Ninja. So we're really spoiled on support and resistance. You really can't miss these trades because you can really follow where support and resistance is. If I break out of HVA on my Ninja charts, retest HVA, look for a long. There's my fib dots. There's my green bar reversal. There's your long symmetry dots to exit. Here is my short. Check out the 5-minute trend filter I built in J signal. There's a 20 crossing down through the 50. 20 crossing down through the 50. That tells me sell the next retracement short. But check how market profile weakened the trade. We broke down. We retested for the ABC short. This pattern happens every single day in the market. Over and over and over again. It's called a number 3 trade. A number 3 is a breakdown retest of HVA. And it can happen on the black charts and it can happen on the Ninja charts. It doesn't matter. It's just a break out of price action. Price action broke out. It retested HVA. It broke out of HVA, retested HVA. It's called my number 3 trade. We broke down through HVA. We retested HVA. We look for continuation. I do this on all markets. All Forex, all stocks, and all futures markets work the same way. This J signal will work on all the markets the same way. If I break down HVA, I look to sell HVA. If I break out of HVA, I look to retest HVA. If I would break down here below LVA, I'll look for an ABC short, breakdown, retest, short here also. That's my next trade setup. I'm going to look out with trend. Here's my next trade setup with trend I'm looking for right here on crude. Because LVA, if it gets broken and gets way away from it, it retests, you look for the sell right there. Okay? But look how you can call these swing highs and swing lows. Go back to gold, Gerald, real quick. You got to understand this. Understand what a straddle is. Look at gold. Are we holding volume profile? Yes. Did it take a lot of novice traders out? Yes. Because it had the big spike up there. Look at the big wick. Look at the big wick on volume profile. Big giant wick. It took a lot of novice traders out, but look how it straddled overall volume profile, right? Still straddling it. Still straddling volume profile. Now, I did close inside of LVA on price profile, so what's it tell you? If you got short, you better at least manage your position and watch it close because we got back inside of it, right? Start managing your position. Make sure you get scaled when you're in the monies. Because the best trade would have been just coming up to LVA, reversal on number 3 without even breaking through it. But see, it closed the whole body candle. So it tells you just be careful in that trade. But LVA is still straddling, right? Now go back to crude oil, Gerald. Look at crude oil, how my black charts and my Ninja charts work. My moving average cross down, that's a first order of business when you log in. You look at the moving averages. It doesn't take a lot of time to figure out what you're doing. If the magenta is up, hard angled up, you know that the bias has been up all morning. But look at it. Look at the moving averages cross down. We flatten out. You're allowed to sell the first test of high value area. My market profile called the high again. Again. Hundreds and hundreds of trades since we opened the trading room. We're doing this same trade. Same exact trade. Hundreds. We've done hundreds of successful trades like this because moving average cross down, sell the first test of HVA. But what you have to do, you have to trade. You have not, like Gerald typed in, thousands. It's been thousands. It's crazy. It's working the order flow because we're not trading the moving averages. Moving averages are worthless, but they're great for trend direction. Market profile tells us where all this order flow is coming from. All the prop firms, all the hedge funds, all the retail, everything. And it spits out major support and resistance. My black charts only spit out my price profile, 2 support and resistance levels during the morning session. Only 2. My volume will spit out 4. Right? Typically 4, sometimes 5. The bottom line is we don't have a lot to trade off of. So if the moving averages cross down, the first thing you tell yourself, sell the first test of HVA. There it is. You have the high in crude oil. But look how the J signal confirmed it. Look right here how J signal confirmed it. J signal broke down through the HVA. So you sell the first test of HVA with the bullseye. So that got the exact high of the market this morning. We called the exact high my system did right here. Exact high. And it was according to my methodology. Because the moving averages crossed down. Sell the first test of HVA. Look how we got back inside of HVA retested. Go over to gold, Gerald. Go over to gold. Check out gold. Look at it. Look how I called out that high before it even came up there. Look how I called out that swing high. How can I do that? I'm not Nostradamus, for God's sakes. I do it all the time, every single week when I educate the traders in the room. We do it 15 minutes, an hour ahead of time. How do we do it? How can we do this? We've been doing it for 3 years in the room. We do it because my long-term members, my 1, 2, 3-year members know that HV and LVA is where the order flow is. And what we do is take retracements with overall trend direction. That's my method how to buy and sell. We can use J signal to help us out though, right? We can use J signal to help us out because J signal can line up also. It can line up by telling us where to buy and sell because of the market profile also and when it bullseyes. But that's how we trade out those black, right? Use the volume profile. Go over to gold, crude oil one more time, Gerald. I want to point out one thing. I'm going to shut this off. If we look at gold, I know my next breaking point. It doesn't take me an hour to figure this out. It takes me a half a heartbeat to know where my next sell is. I know that the market, what? We're crossed down. The magenta is starting to roll over here a little bit, sort of flattening out. If I break down through LVA, I retest LVA in my black J signal line, I'm going to look to short. Right here. Right up against it. But I got to break away from it. Old support becomes new resistance. Old resistance becomes new support. That's how you buy and sell off this market profile. That's how it's called these 2 swing highs. If I take market profile and I break out of HVA, I retest HVA, look for the long. Cheryl, go to gold, and then we're going to shut this off. Look how pretty that is. Look how pretty this gold trade is. Fallen, southbound on the Greyhound. Did I even think about taking the long? No. Did I say short? Yes. Did I know the exact area to short? Yes. Why? Because I know to use my market profile levels. I know that, like Diane's a new trader. Diane got scared, right? Diane got scared because she saw it breaking through that level. She don't understand the system yet. Why, Diane? Because it's called a straddle. You're allowed to straddle, but you can't close a whole body candle close above, okay? That's the difference, right, Diane? Good job, Chris. Way to fill your tick bucket up, buddy. Way to go. Who all got on the trade? Who all got on the trade on gold short that I pointed out? Give me a Y. Good job, Tony. Good job, Diane. Diane, good job. Phil, good job. Liz, Earl, Trevor, good job. Josh, good job. Chris, John, good job. We have to project what we're doing. The target is 1287.77 coming up. Excuse me. Look at that trade. It's knowing. You think this big long bar scared me? This big long 5-minute bar? No, it didn't scare me because I'm smarter than the average trader, right? The fact of the matter is the active trader came out and said 85 to 90% lose at what we do. You know what? That 85, 90% just lost, right? We're the top 10%. And you can be in the top 1%, right? Have the ability to trade with these traders, these professional traders, if you just trade by the rules. This big 5-minute bar stopped all those novice traders out. It was hard up. Like, oh my God, it's going up, it's up. Who cares? It's not broke out a market profile. I don't care about this big, long 5-minute bar. It was surging up on this live video. Do you think it really worried me? No. I want it to surge. Go up. Take all these novice traders' money. If they're not knowledgeable about how to trade these markets and they're counter-trend trading the market, then they deserve to lose. I don't feel sorry for them. If they want to continue to counter-trend trade and think they're smarter than the market, because I know I'm not smart in the market, all we do is go with order flow. That's it. We don't go anything else but order flow. And market profile tells me where that is.